Master support and resistance trading. At the end of this video you will know exactly how to draw the right levels, but also how to build your own strategy using support and resistance levels. So let's get started. Alright, so before I'm going to teach you exactly how to draw the right levels, I first want to explain why does support and resistance work. Because if you don't know the why, if you don't know why certain things work, it's going to be very difficult to continue trading it. Especially when you have bad periods, you do need the confidence in what you're doing, and you can only build that confidence if you understand why something works. So support and resistance works mainly for two reasons, and it's going to be herding and order splitting. So if we take a look at this article over here, it's basically a research paper. And it's investigating why order flow is so persistent. And that basically means, if you take a look here, equity order flow is persistent in the sense that buy orders tend to be followed by buy orders and sell orders tend to be followed by sell orders. And basically this is because of two types of behaviors in markets, and it's order splitting, in which a single investor repeatedly places an order of the same sign, or herding, in which different investors place orders of the same sign. And that basically means that people tend to see the same thing. And that's why some levels work and other levels don't. So if there is a very obvious level, a lot of people are going to see it. And that's what we call herding. A lot of people are going to see it, and a lot of people are going to react in a certain way. When people get stopped out, they all tend to react in a certain way. Order splitting basically means if a bigger player has a huge order, he usually tends to slice it up in smaller pieces and then build a position over time at around the same price. And that's also why certain levels are going to work and going to hold, and you get these perfect bounces that everyone knows. So let's dive into the charts to put this theory into practice. Alright, so we're looking at the dollar yen chart, and when you are going to draw support and resistance levels, I would say stick to the higher time frames. Why? Because it's more obvious, it's going to attract more people, and therefore the reactions tend to be better from those levels. So if we're going to take a look at this chart, and it's the daily chart, I recommend starting with a daily time frame. What stands out? So the market is currently trading at this area. What stands out to you? I would say this swing high is going to stand out. I would say this swing low is going to stand out. I would say that high and this low. These are all the levels I would draw in on this time frame. Nothing more, nothing less. These are the most important levels. It doesn't make sense to be drawing levels down there because the market is up here and there are more levels closer to the market. So I would stick with this. Keep it simple, keep it basic. Anyone that opens a chart can see these levels, these swing points. So highlight those areas, and then when you go to the hourly time frame, you can use those levels as reference points. You can take a look at what price does at these levels. So for example, this level up here, this key level that we draw in on a daily time frame, what happens if we go into that? Do we break it and quickly come back? Do we break and hold it? And then you can use it as an entry level. So for example, let's say price runs into it and then quickly goes below there. What happens in that instance? People that are going to sell in this area just before that level or around that level usually place the stop above that level, above there. Also, people that are buying will be executing as soon as that level breaks. So essentially you get a lot of buying being activated above that level. If then price comes back below that level after this push up, all the people that bought up here are now trapped in their position. So everyone that bought up here is now trapped in their position, and they do need to get out. What happens when they do need to get out? If a buyer closes his position, it's a sell order. So essentially it's going to throw fuel on the fire and create more selling. And you can use those levels and that information to build an entire trading plan around it. So let's give you another example. So if we take a look at the level below market, so for example that level, first of all, why is it important? As you can see, it's a very violent swing point. We aggressively moved into it and now aggressively move out of it. So it's just an area where for whatever reason a lot of buying came in. So it's a decent swing point, and if you take a look at the pips, like that's 300 pips, that's a decent move. So it's an important area. Now why do you want to draw that level in? What happens? Just think about it. What happens if price comes back? This is
where previously a lot of buying came in. So if it's someone building a position over time, they might be defending their position if price comes back. If this level breaks, and a lot of people again are going to see this as some type of support, some type of structure. So people do tend to buy at that level and put the stop below. Again, if that level breaks, it's going to trigger a lot of stops. It's also going to trigger a lot of people that are actively selling the breakdown of that level because it's such an obvious level. So you get a lot of selling activated. If then price comes up there, you know that someone likely absorbed all the selling at that area. If it then comes up there, the people that have sold, that actively sold because they wanted to see a breakdown, are now stuck in their positions. They need to get out, and if they close the position, it's going to be a buy order, and again, that can add fuel to the fire to fuel a new move. So this is basically how support and resistance work, and that's really important to understand. So quick recap up to this point. When you are drawing levels, stick to the higher time frames, stick to the things that stand out. So the levels that really stand out, that anyone can see, that are very obvious, and then make a framework on what you want to see at those levels and actually understand what's going on. You now understand, when there's a key level, what goes on behind the scenes, if it breaks, if it holds, what goes on there. And obviously you can never have it right all the time, but knowing this information can help you to build a strategy. So let's go back to the slides because I want to explain something very important. Alright, so you now know more about how to draw levels correctly, and yes, you can do it on the lower time frames, but like I said, higher time frames do have better levels. You can use lower time frames to then pick an entry, but I would say using higher time frame levels as a bias, for example, is going to give you a lot of benefits. So now how to build a strategy with support and resistance, and it always starts with creating clear rules for when to draw a level, so when you draw a level, but also when you're not going to draw a level. And that's really difficult for most people because today they draw it like that, tomorrow they draw the lines like that, and it's going to be all over the place. So when you're going to build a strategy using support and resistance, create clear rules on when you're going to put a line or when you're not going to put a line, because you want to create consistency there. Like I said earlier, higher time frame levels are usually better. So when you've now established which levels for you are going to be the best and how you're going to draw them, it's then a matter of, okay, how are you going to enter them? Because a level alone is great, but entering a trade at those areas at the right time is a completely different ball game. So then you think about, okay, when am I going to enter? Where does my stop go? Where does my target go? How do I take profits? Am I going to be targeting the next daily level, the next hourly level? How am I going to define those levels? So that's basically a lot of thinking you gotta do if you develop a strategy. And that's basically the thinking that no one is telling you about, because everyone tells you, oh, draw a line like this and that's fine, and then you buy here. But that's very basic. If you want to build a complete strategy, you do need to think about these things, because drawing the lines at the right areas is only a very small part of the entire game, of the entire strategy. So do think about that, have clear rules, create those clear rules, and then, as you guys know me, test and gather the data. What if you used that exact method of drawing those lines for 10 years? So the past 10 years, what would be the result if you use that exact method of drawing lines, but also that method of entering, stop and target? How did that perform? And also in different markets. You don't want to see a strategy working in one market and then not in the other one. So test, for example, the major Forex pair. Test some crosses. See how it performs. And that's how you build your strategy. So hopefully by now you understand why support and resistance works, where to draw the levels, and how to build a strategy around it. Then you test it. Back testing 10 years back at least, so maybe go back to 2010, then you definitely have enough data. Test multiple markets and just see what you developed, how it performed in the past. And that's how you can master support and resistance the right way and build a working strategy. That's even more important. So I want to thank you for watching. If you have any questions about this, comment down below. If you like this video, please like and subscribe, and then I'll see you next time.